Well, good afternoon, everyone, and welcome to St. Louis and the 5th Annual Community Bank Research and Policy Conference. We're really thrilled to have all of you here today. If you don't remember, if you were here last year, I'm Julie Stackhouse. I am the Executive Vice President over Bank Supervision here at the Federal Reserve Bank of St. Louis. So we're going to get started exactly on time. We're thrilled about that. I do want to, though, acknowledge our webcast audience. Since this conference began in 2013, we've live streamed the proceedings to the many who aren't able to make it to St. Louis for the event, but want to participate in the policy discussions. And for those of you that are watching by a webcast, please remember that you can participate. You can send your questions to conference@communitybanking.org, and we will take your questions during the appropriate segments of the program. So without further ado, I'd like to at this time introduce Albert Forkner, the Commissioner of the Wyoming Division of Banking and the current Chairman of the Conference of State Bank Supervisors. Albert?
Thank you, Julie, and welcome everyone. It's great to see the hall filled again for another year. I do want to express my deep thanks to you, Julie, and to the staff here at St. Louis Federal Reserve Bank. You've been gracious again to invite us to this wonderful facility and organize so much of the agenda. There simply would not be a CSBS Federal Reserve Community Banking Research Conference without all these marvelous people that you have here. I'm proud to join an impressive roster of speakers for this conference. Federal Reserve governors and bank presidents, leading academics and researchers, community bankers, and college students. Everyone from those who set monetary policy for the United States to the next generation of banking professionals. That's how broad this reach is. That's how important this conference is. It is not just the conference itself. It's the work of hundreds of people who care about community banking, who care about how well communities are served by their banks, who care whether consumers will have the means to buy that next house or open that business. That is what this conference is about. It's about building a financial system that can be there for them. When I look at the financial system today, I see a system that needs to get better. And I continue to be concerned about whether banking is becoming too disconnected from the very communities they serve, whether families and small businesses, no matter where they are, have equal access to credit and banking services that are safe and fair, whether fintech companies or other technologies can make the banking system better or turn it into something that takes advantages of consumers, and whether the federal government is a partner that supports a diversified banking system or unintentionally creates more consolidation. These are the concerns on my mind. They are the concerns of other state regulators, and I would hazard a guess that they're the concerns of some of those in this room. As a state regulator, I supervise a wide range of financial institutions, but the core of state regulation has always been community banks. The local institutions that finance Main Street businesses, provide banking services to our neighborhoods, sponsor Little League baseball teams, and go into schools and teach young adults about how to manage their finances. We are right, absolutely right, in wanting to preserve this form of financial services. In our diversified system, there is room for many different business models, from the large money center banks that compete across the globe, to virtual financial providers, one tap away on your smartphone, to good old-fashioned banking based in and for our communities. As a regulator, I believe that consumers benefit from a broad diversity of sources for credit and banking services. But today I'm here to stand up for the community. We are here to learn how the community lending model can serve more families and more businesses, to learn what the obstacles and the opportunities are before them, and it all starts with data. This is the 5th year that CSBS and the Federal Reserve have co-sponsored this research conference. Over the years, we have unearthed valuable data on product composition, compliance costs, impact of new regulations, adoption of new technologies, and analysis of new business models. And this data has been quantitative as well as qualitative. Our survey research of community banks paints a picture, while the color is filled in through town hall discussions between bankers and regulators. This data is how we know that the core business model of community lending holds up better than others during economic distress. Small businesses and commercial lending are sources of growth, not contraction. Federal mortgage regulations have created a drag on lending. And annual compliance costs for community banks approach $5.4 billion. That's a pretty big number to me. Now, this data not only has value to individual community banks planning their future, the data also has value in Washington with federal regulators and policymakers. More and more, they want to know how rules and legislation being considered might impact community banks. We're able to answer some of those questions, not all, but some. Our research has contributed to an emerging belief in Washington that there should be different regulatory regimes for banks that pose systemic risks and those that do not. And that's good news for community banks. The 2017 version of this research conference looks to add to our collective knowledge. In the various panels, we will learn about the relationship between geographic proximity of bank supervision and bank success, how regulation based on asset size affect bank mergers and acquisitions, how community banks respond to entries and exits within a competitive market, how government guarantees have spurred lending to small businesses, and lots more. As chairman of CSBS, I am proud to represent all state regulators today. And I am proud that the Federal Reserve is our partner for this conference. The Federal Reserve has been generous with its time, people, resources, and speakers. Together, we are committed to looking at our financial system and finding ways to make it better for community banks, but more importantly, for the consumers, families, and small businesses they serve. I hope you all enjoy the conference. Thank you.